The connection between interest rates and inflation is a critical topic, especially when you're thinking about securing your wealth for the long term. If you're like many American retirees, you've probably heard a lot about inflation and interest rates lately and wondered how they could impact your retirement savings. The reality is, these two forces are deeply intertwined, and understanding how they affect your wealth can make all the difference in protecting it. Stick around to the end, and I'll show you how you can take action today to safeguard your retirement, especially in uncertain times like these. Before we dive into that, if you're serious about protecting your wealth over the next couple of weeks, I encourage you to click the first link in the description. Thousands of Americans are using gold IRAs as a hedge against inflation and economic uncertainty, and you'll get a free guide that explains why this might be your best option if you have 100K or more in your IRA or 401K or even 5M plus in savings. Now, let's talk about interest rates and inflation. Simply put, interest rates are the cost of borrowing money, and inflation is the rate at which prices for goods and services rise, eroding the purchasing power of your money. These two forces are deeply linked because when interest rates rise, it tends to slow down inflation. That's because higher interest rates make borrowing more expensive, which in turn reduces consumer spending and business investment, ultimately cooling down the economy and slowing inflation. However, inflation doesn't always behave predictably. Even when central banks raise interest rates, inflation can still persist if there's a major disruption in the supply chain or if there's too much demand in the economy. As inflation rises, the value of your savings declines, which is why many people, especially retirees, look for ways to protect their wealth from inflation's damaging effects. One way to do this is through gold IRAs. While inflation erodes the value of cash and traditional bonds, gold has historically been a safe haven that tends to rise in value when inflation is high. Gold is a physical asset that holds intrinsic value, unlike the dollar, which can lose purchasing power over time. When inflation spikes, gold often becomes more valuable, making it an attractive option for people looking to preserve their wealth. Now let's consider the alternative, keeping your money in savings accounts or bonds. With interest rates rising, the return on savings accounts and bonds can look appealing at first glance. However, these returns often fail to keep up with inflation, especially during periods of high inflation. This means the purchasing power of your savings may still be eroded, even if you're earning interest on it. That's why more and more retirees are turning to gold IRAs, which can help you keep your wealth safe from inflationary pressures while still benefiting from market growth. The beauty of a gold IRA is that it lets you diversify your portfolio without the risk of market volatility, and it's a long-term hedge against inflation. In the end, inflation and interest rates will always be part of the economic landscape. But by understanding how they interact and taking steps like rolling over some of your retirement savings into a gold IRA, you can protect yourself from inflation's worst effects. Gold has been a store of value for thousands of years, and it's proven to be one of the best options for preserving wealth during times of economic uncertainty. If you're serious about protecting your wealth, especially if you have 100K or more in your IRA or 401K, or even up to 5M plus in savings, click the first link in the description for your free Gold IRA guide. This guide explains why gold IRAs are becoming the go-to choice for retirees and shows you how to make sure your retirement savings are safe, secure, and growing. Remember, inflation is a powerful force, but you don't have to let it erode your retirement savings. Take action now and secure your future with a gold IRA today.